So today we want to talk about Enphase because Enphase is currently crashing in pre-market, down 14%, and I know a lot of you guys are interested in this one, and actually for me this is a stock that's on my watch list as well. So I thought it'd be a really good time to talk about this because sometimes when you get these big news out here and these big drops, it's something really good to talk about and an interesting opportunity. And I know I was going to talk about a brand new stock, so what I'll do is I'll actually knock that back another day, and I'll probably talk about that on Saturday and do a weekend video for you guys. But I want to talk about Enphase because sometimes out of nowhere we get these big surprising drops, and it's something that everyone's kind of talking about, and you know, I want to have my opinion on it and say my opinion on it as well. So I'm going to talk about Enphase. Before I do get on that, I don't know if you've seen the last few days in the stock market, but it's been a brutal few days in the stock market. I mean, the S&P is down nearly 2.6%, the S&P 600 as well. In smaller caps, a lot more volatility in there, doing its classic. Even though it's at a lot lower valuation than the S&P 500, the S&P 600 is dropping double what the S&P 500 is. So once again, we're seeing the big disconnect between the S&P 500 and 600, where even though the 600 is such lower valuations, it's still dropping more than the S&P 500, which is unbelievable to see. But let's go on to Enphase. So I last covered Enphase actually on the Patreon. So on the Patreon, we do a stock request where basically members on the Patreon and on the Patreon join through the Discord, they submit stocks for me to look at. And one week, actually on the 4th of October, as you see here, they suggested Enphase. Now on Enphase, I actually did a video on it on the Patreon, and that went on to a little bit more detail about the company as well and what potentially prices I could look at. But what I'll let you know on that video is that I said that I'm worried that it's going to go cheaper. I was worried that the stock could have a couple more ugly quarters in them, and that's what's putting me off, because I could really see this stock dropping. And in the long term, I like Enphase, but my concern was around the short term, and that I feel like they could have a few more bad quarters in them. Now, actually, Enphase itself, even though the stock is down 15% in pre-market, isn't anything to do with Enphase, why the stock's dropping. The reason why Enphase is dropping is because of another similar company, another solar play, which is SolarEdge. SolarEdge Technologies came out, and that's actually dropping even more. That's down 24%. They came out with preliminary earnings. Now, you guys know preliminary earnings are normally one in the market. Look, these earnings are going to be really good. They're way ahead of expectations. Or it's the other way. Normally it's the other way, where it's like these earnings are not going to be what you're expecting, and they soften the blow a little bit for investors. And that's what happened. These earnings, I tell you what, I thought, they're going to be bad. I didn't actually realise how bad they were. These are really, really bad earnings. So if you actually look here, they said that revenue for the third quarter is now going to come in between 720 to 730 million. This is down from the prior guidance of 880 million to 920 million. That's like a major drop in their revenue forecast. To get it that wrong when you only gave that guidance a few months ago, that's a massive miss. Gross margins, they said that they could hit 31%. Now they've actually gone down to 20 to 21%. Operating income could go as low as 12 million, following the guidance of between 115 to 135 million. That is a massive downgrade. It's been a while since I've seen a downgrade like that. And just, if you look here, it said that during the second part of the third quarter of 2023, we experienced substantial unexpected cancellations and push-outs of existing backlog from our European distributors, SolarEdge CEO confirmed. Also as well, what you're looking here is thinking, well, the big thing why the company is slowing down is because, you know, these installations cost a lot. You know, the interest rate environment is getting higher and higher. And we're seeing this all the time. We're seeing so many high interest rate sensitive companies are now getting affected by it. We are seeing the economy slow down. We are seeing the high interest rate companies be affected by what's going on. And the crazy thing is, actually the other day, yesterday, we actually saw Jerome Powell come out and said, yeah, we're still going to hike up interest rates. And it's like, well, why? Because it's 4% instead of 2%, and the only reason why it's 4% is because of a lagging indicator of shelter. You know, he basically came out and said, yeah, we want to crash the economy, so we get inflation down to 2%. Like, yeah, you destroy millions of companies that will cost millions of people, you know, jobs. You do that, you know, if your ego is that big that you're gonna do that, just because you can't look at the actual real figures and see where inflation's at. It's crazy. It's crazy. Anyway, but obviously we've seen a lot of high interest inflation stocks get absolutely slaughtered at the moment, and a lot of these solar companies are exactly the same. So that's why Solar Edge is down massively at the moment. Now, why Enphase is down related to this is because they're in the same industry. People looked at Enphase going, well, if Solar Edge are having that, we probably think Enphase is going to be something similar. Maybe a little bit better, maybe a little bit worse, but we're expecting them to do something similar. And that's why people already got the sales in for Enphase. Now, the thing with Enphase is they have to bring their earnings out still. And then you could see a situation where they come out and say, it's not as bad, and the stock could go up a little bit from this dip. Or it could go to the point of view where actually it's a lot worse than what Solar Edge is seeing, and we might see then another double dip on Enphase. And when you look at Enphase right now, I mean, you can't believe that 1 year ago, this stock was a $336 stock, and then it's down 65%. With the drop today, it's going to be down over 70% in a year, which is a major drop. Now 15 billion, 29 times earnings. But as well as the solar space here, the big thing that a lot of these companies are having, not just the high interest environment, is a lot of them are taking off, tough comps at the moment. Renewable energy went crazy in 2022. That's why the share price was so high in 2022, because every single, and it'll be the same on Solar Edge. Yeah, you look here, 2022, share price was doing very well. A lot of these solar companies went absolutely crazy because the whole oil situation in prices going up, the whole Russia and Ukraine situation, oil prices went up. Everyone at that time frame, when interest rates are still pretty low, this is the best time for me to save money on these high energy prices that are coming in. Let's do it right now. So they've got tough comps, and then as well as taking the tough comps at the moment, add on top that you have the high interest environment. It's a double whammy for these solar plays. And realistically, are we going to see weakness in Enphase in their upcoming quarter? I think so, because you look at the last earnings that we saw, they were saying then they're starting to see weakness. You look at the miss on the revenue, it was a bit of a miss. You look at the outlook was way below what was expected, and that's actually caused the stock to drop on the day a good amount. I can't remember how much it was. I would dare say 10 to 20%. The stock has downtraded even more since that time frame, and down 30% since those earnings. So we've already seen weakness in Enphase's earnings, and now seeing more weakness in Solar Edge. I think we will see weakness in Enphase's earnings. I think we will see it, and I think that the scary thing about Solar Edge is that they actually came out and said that it was a European business. We looked at Enphase's earnings last time. They saw weakness in their US business, but their EU business was actually doing okay. That was helping the growth look actually okay at the moment. So if they have a weak US business and now a weak EU business, that's going to be a really big double whammy for this company, and I would be worried as a shareholder. And as someone that's not investing in it, I will expect Enphase to come out with weak earnings. And that's what's always put me off. And I said this when I did the Patreon video. In this video, I said, realistically, I'm just going quarter by quarter by quarter, because I think it's going to get worse. And it's all right assuming it's going to get better in the next quarter. But for me, I look at it and I go, I can't see them doing well in the next high interest rate environment. I still think they've got very tough comps to go through. I can only see this getting worse for the company in the next year. And the big thing is when you look at what analysts are expecting, analysts are actually expecting still 13% growth this year. If you look at Enphase, they're still expecting a rebound next year. They're expecting 12% growth next year. They're expecting average EPS to still go up this year. They're expecting next year EPS to go up again, nearly over 20%. And I'm looking at these numbers going, I don't think analysts are all pricing in how weak this could get. This could get really weak. If you start talking about a company that is going from, what they did in the last quarter, which is, 35% revenue growth, and growing the EPS, all of a sudden you have these numbers that come out with Solar Edge, and the revenue is declining massively, the profitability is declining massively. As soon as those numbers get put in, updated into the forecast, you could see these stocks drop even more. I said about Enphase, I said I won't be realistically surprised to see Enphase actually drop another 50%. I think it's got it in it. I think these companies could have a drop off by that much still in them. And the thing is, at the moment, it's for me, I look at, is this a buying opportunity? And I might do another video on Patreon about it and actually try work out a valuation I would buy. But these are really hard companies to actually value at the moment, because you're trying to value what the longer term growth is going to be, which is very tricky. Now, analysts are forecasting a recovery next year. I don't know if we'll see a recovery. I don't know if we can see a recovery next year. You're trying to work out profitability. You've seen, when you look at SolarEdge's earnings here, they've just gone from 115 million to 135 million in operating income, down to 12. So you look at something like an Enphase, and you might be looking at the moment, and you might look at a forward P, and you might go, oh, Enphase is currently a forward P of 19 times earnings. You're like, that's not too bad. If you think about, oh, next year they're going to grow back at double-digit growth, 90 times earnings, you're like, that's actually not too bad. But the problem is within a few months, these numbers might get thrown out, because if we're seeing this massive slowdown that's going on, if Enphase come out with these sort of numbers that SolarEdge just come down, that all gets thrown out. You're now having to work Enphase out on total different numbers. You're having to work it out on total different revenue growth, total different amounts of profitability, and it gets really, really hard to value. At the moment, you might go, that's very cheap. Within 1 quarter, you can get thrown out and go, actually, if they're not doing those numbers, this has a lot more downside. And this is where it becomes really tricky for Enphase, because there's 2 points of view that you're looking at this one now. You're looking at a point of view is like, how low can it go in the short term? And if this company is declining revenue 10, 20%, if the profitability is thrown in half, you could easily see the stock throw down, another 50% from here, in my opinion, which is a nightmare if you're trying to build a position in it. At the same time, you're then trying to value it, well, yeah, it's going through tough comps, but what's the growth going to be 3 years down the line, 4 years down the line, 5 years down the line? What's the profitability going to be in the longer term? And then you're thinking, well, it could be a very good opportunity in the long term if it rebounds back to good numbers. But then you don't know what those longer term numbers are going to be. So right now, Enphase is a very, very hard company to value. This is one of the tough companies to value, because you might be looking at a grand opportunity here where you're like, you might look back in a few years ago, oh, do you remember when it went to $98 in pre-market? Fantastic opportunity. Realistically, if they have a year where the revenue declines 20% and the profit gets shoved in half, you might see this drop another 50%, and you might go, oh, glad I didn't buy it at $98. It still had another 50% to drop here, which is once again the really, really tricky thing. So yeah, I put a suggestion out on the Patreon and the Discord to do an updated valuation, and maybe we'll run a few numbers on worst case scenario, best case scenario. So you guys on there, if you wanted to have a little bit of a deeper look into the numbers, vote for that. But right now for Enphase, I'm just personally taking it quarter after quarter after quarter to see if we have seen the bottom or it just gets worse. I think this could be what you call a falling knife, where you think you've got the worst priced in, and then they come and bring the guidance down again. And I think that could be the case. I think a few analysts could get surprised by this one, how much this is. They're expecting a rebound. I think it could be a really tough, couple of months, and I think 2024 could be a lot tougher than what these numbers are suggesting here as well. So, yeah, that's what I'll say on that one. Real quickly, last 2 minutes, I just wanted to throw in here DraftKings. I want to throw a bit about DraftKings. Probably worth a video on its own, but I thought I'll just shove it in today's video. Not being too bad, it's been holding up quite well on the share price, but there was actually some really good news that came out of DraftKings the other day, and it's very quiet. It's not getting enough mention. This is really good news. So DraftKings has now become the biggest US online gambling company. They've overtaken FanDuel. We know basically the US market is dominated by FanDuel and DraftKings. They own the big share, they own over 70% of the market. We know them two have been battling out, and for the start of 2020, 2021, we know FanDuel had DraftKings. DraftKings made good product changes, product additions, great acquisition of GNOG, and now we're seeing that really pay off. We've seen the last couple of months DraftKings has been closing into FanDuel. It's now overtook FanDuel. So DraftKings now the number one player in the US. Absolutely fantastic news once again. Maybe some suggestion there that the next earnings are going to be very good. The latest data that's been coming out of some of the US states has been very good as well. So we'll see what happens anyway. We don't have to wait too long for that one. Only around about 2 weeks anyway. So we'll see what happens there. Hope you enjoyed the video on Enphase, guys. Anyway, see you in a bit.